Hello, hello. So lately, after the latest earnings report from Facebook or Meta Platforms, as it's the new name of Facebook, really, the company fell short and lost a lot of its value. If you take a look at the 5-day period here, you will see that the company went down at some point from 320.22 down to 244, and now it's trading at 224 actually. And so there comes a point where all this fuss and all this trend about Facebook will dissipate, and actually the earnings report from Facebook wasn't nearly as bad as it was meant to be, really, from media. But I guess it kind of helps with bringing the company stock price down a little bit. So as a potential investor, it may be an interesting opportunity for those of you who are looking to enter Facebook. Now, the question to ask here yourselves is what is the fair price of Facebook based on what Facebook and Meta, really? I'm just mentioning FB because I'm used to it. What is the price of Facebook based on how much money they're making and how well the company is doing? This is what we're going to attempt to respond to in this video. And you will notice that at its current price, Facebook is actually trading at a PE of 16, which is ridiculous. I mean, it's very, very low, of course, especially for a tech company. But as usual, we want to examine the company in terms of its free cash flow. And why are we using free cash flow? We're using free cash flow, which is better than earnings, really, because earnings can be kind of manipulated a little bit legally, just because there's like depreciation or amortization and other expenses of that sort that can be excluded from the current income statement, added to the next ones, and they can give us a skewed picture of what is really going on with the company. However, the free cash flow of the company is much, much better because it's the cash flow that comes into the company from operations, and that excluding capital expenditure, so whatever the company is requiring to actually perform its normal operations. Now, if we take a look at the free cash flow of Facebook here, you will see that this is the last 6 years, really. We're going to examine the last 5 years for the most part. We will see that the company was making 15 billion here, 21, 23, 39 over here. It's actually 5 years over here, so 17, 15, 21, 23, 39. What we're going to do next is calculate the 5-year average of this free cash flow, about average. So we're gonna do 17, let's do 17.5 for the first year plus 15.3, be a little bit more precise, plus 21.2 plus 23.6 plus 39. Let's just do 39 here. All right. So we're getting $80 billion for the total free cash flow of the company in the last 5 years, these 5 years over here. Now, let's divide that by 5 because we just calculated 5 years, the 5-year free cash flow. And this gives us an average of $16.16 billion of free cash flow for the company a year. So that's how much free cash flow the company has been making on average the last 5 years of operating. Now, you will notice that in 2021 the company was making $40 billion, which is a massive, massive increase, and it may be what's going to be happening with the company from now on. So you may be expecting a similar free cash flow for next year, which will kind of skew this average over here, because if the company is going to be making about $40 billion for the next couple of years or so, then we're looking at an average which is closer to 40, of course, maybe even 30 or something of that sort. So that's very, very important. But we're going with a 5-year average right here just to get a more conservative estimate here. And so typically we use and we give these kinds of companies, tech companies, a higher multiple of 20 to 25. Just because they are growing massively, and you will notice it as well in the free cash flow here. The company's free cash flow is growing, and also they are selling software or services like advertising, which do not have much overhead, and thus they make a lot of gross profit here and net profit. So they make a lot of money for the amount that they spend. That's very, very important, and this is why we are willing to pay more for these kinds of companies, and we give them a higher multiple. So in this situation, we're gonna give Meta a multiple of 20, which is what we tend to be using here. And thus, this will take us to a current expected market cap of $323.28 billion. And currently we're looking at a market cap that is sitting at $612 billion. So based on the free cash flow, the company is currently overpriced. Yet again, remember that we used these previous years, which may not be indicative of what's happening in the next few years. Now let's calculate using this value now. $323.28 billion is what the expected market cap would be. Now, if we go back and take a look at the overview tab here, we will see that the outstanding shares of the company are $2.78 billion. And so in order to get an average, we can use this to $272 billion and divide it to the current market cap, which is expected market cap, which is $323 billion. So if we divide this to 2.72, which is the amount of outstanding shares, we're getting a price per share of $118.8. So about $119 is what we would want to buy this company for if we were to give it a multiple of 20 times its free cash flow of the last 5-year average. Now, let's be a little bit less conservative and more towards what is really happening with Facebook right now. And if I go back to the cash flow, let's just use what I think is a better value over here, just because I want to exclude these earlier years. The company grew a lot since then, it looks like. And so I'm going to go with the average of these two here. And I'm going to do 23 about plus 39. It's actually a little bit less even, equals 62 divided by 2. And so we're getting that the last 2-year average is about $31 billion, which I think it's much more fair to the company, just because they seem to be making much more than what they used to make in the previous years. So the average that we used earlier may be a little bit too conservative. So let's just go for 30 actually, give it a little bit of a discount here. So 30, and we multiply that by 20, which is the multiple that we would want to use. And now we're getting 600, which is much closer to the current market cap, and I think it's more fair. And now, remember the outstanding shares were 2.72 billion, and we can divide that by 272 and discover that at the price of $220.5 we're getting a fair value for a 20 times multiple of the last 2 years of free cash flow, the average of the last 2 years. And anything below that price would actually be a bargain if we're taking this as our estimate. Now let's be a little bit even less conservative and use a multiple of 30, which again can be potentially an even okay multiple if we're looking at companies that are growing massively. Yet it starts to be getting on the higher side, so I typically want to keep it between 20 to 25 when we're talking about tech. But let's just give it a 30 to see what's going on here. This is going to take us to $900 billion and in terms of an expected market cap. And if we divide that to 2.72 again, which is the amount of outstanding shares, of course, in billions, we're getting that the company stock price that we expect to pay for would be $330 to buy the company using a 30 times multiple, which I think it's very likely that the company will enjoy at some point soon. And so you see here how we can use this kind of simple model to calculate an effective price for Meta. If we're looking to buy at a very cheap price with a 20 times multiple and calculated using the 5-year average of free cash flow over here, which is very conservative, we're looking at $118. If we're looking at the 2-year average, we're looking at about $220. And if we're taking a look at a 30 times multiple of the 2 years, we're looking at 330.8, which is more than what the current company is really. So this would take it to an underpriced value right now. So what I think about Facebook is that is, for me, in my eyes, this is definitely a buy right now. And again, I'm going a little bit with free cash flow that I'm expecting to be making currently, really, because these previous free cash flows tend to be a little bit less, really. And I think that using these metrics, we can kind of derive a value for the company's stock price that makes a lot of sense. Like maybe at these levels, we're looking at somewhere in between somewhere in between this kind of 20 to 30 billion dollar valuation in terms of free cash flow of the company, and an about 20 to 30 times multiple, which I think is very, very fair again for a company like Facebook, especially with the expected growth that's going to be happening in the next few years for Facebook and the metaverse and the whole 9 yards of the company, really. So that's what I wanted to mention about Facebook. Hopefully that gives you an idea about how to approach the company. Don't pay too much attention in the news because this is going to dissipate at some point, and all that's going to remain is the free cash flow. So look at what the company is making, not what the company are saying, or what the people, sorry, are saying about the company. Rumors are rumors. I mean, sentiment is sentiment. Eventually, all this thing dies down, and what remains is how much the company is making. And this is where you should be focusing your efforts. This is what you should be looking at, because when the company stock price is down, this is a good time to buy if the company is making insane amounts of cash flow, as Facebook seems to be doing right now. It's almost like a cash generating machine here. So thanks for watching this one, and I'll see you the next one if you did enjoy this. And if you did, please leave a like and subscribe, because I'd love to have you watch the rest of the videos that I'm going to be making very, very soon. And you can also join our Discord channel. We are already quite a few people there, more than 15, I believe, right now. And we'd love to see you there. You can find the link in the description box below. In the meantime, take a look at this video that I made about Wix, which is a competitor to Shopify. Thanks again. See you soon. Bye-bye.